Welcome to Netaji Subhash Open University. Friends, this is a session on goods and services tax, and the chapter we are going to discuss is called Composition Scheme framed under GST law. We had a broad conception about GST wherein all goods and services are taxed as per the applicable rate of taxes based on the value of the supply made by the supplier to the recipient. And there are requirement for registration wherein the person who is mandatorily required or beyond the particular threshold limit need necessarily to take a registration under the GST law and to file proper return, levy proper taxes, issue appropriate invoices and do everything under the statute. So, a question came out whether a very small traders or a very small manufacturer or a person who is in the business of hotel or restaurant, very small restaurants, whether it is possible for them to maintain all the books of accounts of the input tax credit and then the sales register, the purchase register, reconciliation, annual books of accounts, filing every month GSTR 1, 2, 3, becomes very difficult. It becomes very, very difficult. So, there was a call, there was a demand. The applicability of this act should be, relaxed for a smaller group of people, small traders. And for them only this new law has come, new chapter, the new section, the new provision has been inserted in the GST law called as a composition scheme. Now, what is composition scheme? It is an alternative method of levy of taxes for the small taxpayer whose turnover is up to 100 lakhs or 75 lakhs in the special category of states, northeastern states like Assam, Mizoram, Manipur, Meghalaya, Tripura, etc., or even Himachal Pradesh. But the GST Council has got the authority either to add some state or delete some state or increase the threshold limit from 100 lakhs to say 200 lakhs or 500 lakhs or even reduce it. But this conceptually it's a benchmark level, right, below which 100 lakhs below which the traders, the business houses, small taxpayers can avail the benefit of a composition scheme. Now, what is composition scheme? The option is on the taxpayer under this composition scheme, right, whose turnover is below that particular threshold limit to pay the taxes on the goods supplied at a comparatively much lower rate, that say only 2%. The rate of tax I will come later at a 2%, 1% CG, 1% SG, with definitely certain restrictions into it. Now, the law says the aggregate turnover, your aggregate turnover is more than 100 lakhs or not. How I will understand? The lawmakers will understand. The law says the aggregate turnover will include the value of all taxable supplies, exempt supplies and export made by the person within the same PAN number. So, PAN is the basic factor which determines to identify whether it is a MSME, small trader, small vendor, or it's a big vendor, and if its turnover is less than that threshold limit of 100 lakhs, you are eligible for composition scheme. Now, the eligible person who is eligible for this composition scheme, what benefit for them and what is not a benefit, what is a disadvantage for them? Let's understand that, followed by the conditions. Now, the eligible persons opting for the payment of taxes under this composition scheme can pay tax at a prescribed percentage of his turnover of his turnover every quarter. For others it is per month, here it is per quarter. Like the manufacturer, they can pay, right, manufacturer other than the manufacturer of ice cream and pan masala and tobacco product, 2% only on the output. Restaurant services 5%. Traders or any other supplier is eligible for 1%. So that's definitely very small business house, like very small taxpayers, small shop at the street corner who can't maintain all the documentary evidences and file all the returns, comply all the procedures, can always go for the composition scheme. Persons opting for the composition scheme levy will have to pay the tax on a quarterly basis before 18th of the month succeeding the quarter. That means, say April, May, June is the quarter, July 18th will be the due date for payment of the taxes. What are the these things, restrictions into it? Notified persons, that means the manufacturer of ice cream, eligible sodas, etc., cannot opt this particular scheme. 2. Casual taxable persons or a non-resident taxable persons also cannot avail it because they are the non-resident one. Business which supply goods through e-commerce operator are restricted. Supplies whose gross turnover exceeds 100 lakhs should be out of that composition scheme. And a very big restriction, a person who is making an interstate supply, what do you mean by interstate supply? I am telling that my aggregate turnover is less than 100 lakhs, very good, I am chargeable with only 2% tax, okay, under composition scheme. And at the same time, I am supplying goods from, say, West Bengal to Tamil Nadu or from Tamil Nadu to Delhi, that's called interstate transaction. The law says you are not eligible for composition scheme. This benefit of 2%, you can't avail it. It is only for the small players. With the restrictions once again, the restrictions are: number one, turnover should be less than the value, e-commerce are not eligible, casuals and non-residents are not eligible, notified manufacturers like pan masala, gutka, tobacco products, cigarettes not eligible, and person who is making an interstate sales not eligible. And who are eligible then? Balance portion, only very small one. They need to pay once the quarter is over, 18th day of the succeeding months, they need to pay the taxes, the 2%. They need also to file a return quarterly basis, that's GSTR 4 on a quarter to quarter basis. This is the mandatory requirement for them also to charge the taxes, to levy the taxes and fulfill all the obligations. Let me once again read out the tax rates applicable. For a manufacturer, CG 1%, there cannot be IGST because no interstate they can do, restricted. CG 1%, SG 1%, total 2%. CG means state goods and service tax, central goods and service tax, 1 plus 1 equals to 2%. If it is a trader, then 0.5% equals to 1%. And if it is a supplier of a restaurant in nature who provides the food and beverages, then it is 2.5 plus 2.5 equals to 5%. Few conditions needs to be followed to avail this benefit. Number one, no interstate outward supply be there, shall not collect any tax, they cannot collect any tax, it is only direct 2% or 1% or 5% on the bill value. Issue of bill of supply and not tax invoice, like for others it is a tax invoice as per the prescribed format, here it is only a bill of supply. They are restricted to get any input tax credit, that means the government says that you are not charging full rate of tax, and if you on your purchase, if you avail the input tax credit, then it doesn't make a sense. I cannot give you that benefit of 1% or 2%. So you cannot get the benefit of input tax credit on the purchases that you make, any purchases, whether goods or services. You should not be engaged as in the electronic commerce portal. That means you cannot be, Ola, Uber, or Snapdeal or Amazon, like of an aggregator e-commerce transaction. You can't do. Not to be engaged in the supply of services excepting food and drink services. Write the word composition taxable person on every signboard. On every signboard outside your shop or outside your plant, you should specifically mention that you are a composition taxable person. And if I buy goods from you at 1% and 2%, right, composition supply on every signboard, that's based on that, right, documentation that you are a composition supplier. There is only one issue that comes out, that can I have an option? So during the year, if I exceed, say within 12 months period, my turnover exceeds 100 lakhs, can I say for 6 months I become composition, for the balance 6 months I become full dealer? Losses? No. Your option to become a composition dealer lapses if your aggregate turnover exceeds 100 lakhs during that particular period of time or during that particular year. And not need to renewal every year. Once avail composition scheme can continue till it crosses the benchmark of 100 lakhs. So that's the overall coverage of the composition scheme. Penalty provisions are also applicable over here. What are the penalties? It's like if a person who has crossed that 100 lakhs benchmark still charging 2%, definitely violating the provisions of the law and need to be penalized. And they need to pay the differential amount of tax with the interest. Penalty would be there. Even prosecutions would also take place at that particular point of time. So, my friend, we come to a conclusion of this chapter. To understand very specifically, composition scheme is precisely made for a very small level of players in the business, and to basically facilitate them with a lower rate of tax and the hassles of removing the hassles of monthly filing and maintaining all the documentations like GSTR 1, 2, 3, etc. And that definitely make the life comfortable for the people who are absolutely at the lower end and below the benchmark of 100 lakhs rupees, or the rate or the total turnover, aggregate turnover, as may be determined by the GST Council from time to time. We come to the conclusion of this session, and remember before we close that composition is only applicable provided all the conditions are fulfilled. Any violation, any lapse is definitely liable for a penalty and interest. Thank you, my friends.